Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, May 25th. Great to have you here. I'm your host, Jesse Allen, markettalkag.com. That is our home on the web. Markettalkag.com is where you can find us. Facebook, Twitter, Instagram, all of our social media links, our YouTube channel, all of our streaming sources. Everything is available online at markettalkag.com. We had a meltdown in the grain market, I think, to say the least here today. Got a lot to discuss. Let's bring in Brian Splitt with agmarket.net. Brian, good afternoon. And I think just to start, I had quite a few farmers texting me here today about midday when this market started to sell off. They're wondering what's going on. A lot of money seemed moved out of this market today. A lot of funds decided it was time to get out. Overall, that seemed to be, to me, the biggest catalyst. But what did you see? What was the reason behind this big sell-off today? Let's just start there.
Well, I think we did a lot of technical damage, and right now you've got a fund position that is still quite long. The commitment to trade report that we had on Friday afternoon showed that the funds were still quite a bit longer than what a lot of the trade had believed them to be. Based on the size of the move to the downside that we had already seen. So I think that made the market seem much more vulnerable because of that. We've got an overall non-threatening forecast for the next few weeks. But I guess, the main thing is that it doesn't really matter why the market's going down. It is. And so we've had plenty of opportunity to take advantage of very good prices. And so that's the thing we need to be mindful of. It doesn't matter why the market's going down. It's going down. Are you protected or are you not protected?
Well, that's a great point you make. And I think we lose sight of that quite a bit. I think farmers get caught up, and a lot of folks get caught up in the fact that, I didn't sell, enough corn at $7, now I just lost $1.50 off this market. And I think that's a great perspective to keep, because I think a lot of times we get lost in what the price is, and instead of, like you said, being protected, Brian.
Yeah, Jesse. So, right. I mean, if a producer called me today and said, well, why is it down today? And I said, well, it's down because of this. Or I said, well, it's down because of that. Is one reason better than the other? Does one make you feel better? If we were down because of something and we weren't down because of something else, it doesn't matter what the narrative is. So, we're seeing this market, it's correcting. I think technically something we need to be very well aware of is there is a head and shoulder top on the July corn chart. July is the front month contract. And so let's take a step back and think about two things that technically are very negative right now. The first is that when we had the May contract expire, July then became the front month. And when May left the board, July left a gap on that weekly chart, and we gapped lower from 685. So that's where the May contract had the low that week before expiring, and then July became the front month. Now, let's think back to 2013. 2012, we had the drought. 2013, we started to really come down from those elevated prices. There was a point where July left the board, it expired. September became the front month, and we gapped from 684. So the weekly continuous corn chart now has gapped lower again from essentially the same price. And think about this. That gap was left in 2013. We did not fill that gap until this year, 8 years later. So you could be a very patient person, but that's a lot of marketing years to think that this market's going to go back and potentially fill that gap. So then we talk about this head and shoulder top in July corn. We had made some lows in late April at 629.5. Then we had made some lows last week after we came down off the highs at 633 before getting a good bounce. And so today we broke through the neckline of that head and shoulder pattern We traded limit down a couple times today. What we should be doing if you're trading the chart technically is you should be selling a retest of that neckline. I would say that anywhere in the mid to upper 620s is going to be a selling opportunity on July corn, risking above today's high. Today was also an outside day down. We opened July corn actually higher. We opened it above yesterday's highs last night. We closed below yesterday's lows today. That is also a bad sign. And so the market's probably going to go a lot lower than people think it could or should. The chart is saying that the measurement on July corn suggests it will probably go down to the 530 to 540 region. Seems crazy because we were just, we're at 620-ish right now. But I tell you what, when we had that January report, and that was the January quarterly stocks, the final production numbers, all that, we had a high the very next day at 540 and a quarter. And we spent between mid-January all the way to the end of March trading in that sideways trading range. So if this July contract actually goes to where the head and shoulder top suggests it should, we're just going back to where we spent the first 3 months of the year before we got that bullish quarterly stock report in March with the acres that led us to that last leg up. And that's really just the market going back to the scene of the crime.
Yeah, and that's a great analysis of where we're at, Brian. And you look at corn, and we think about this, going back to basically where we were. We obviously know the volatility in this market amplified the longer positions, the higher limits, everything else, all the money flow that's in the markets right now. Do you feel like, though, we're starting to hear more about weather? We're starting to take a lot of factors into account. You look at the head and shoulder top and corn specifically. Do you think we could possibly retest as we get later into the summer? I think at this point now, we're looking at weather, and we're not going to know some weather stories here for at least another month or so, depending on how these forecasts shape up.
So we just finished a weather market, and that was the South American weather market, and I think that's what led to the top in corn there. We had priced in, the reduction in the safrinha corn crop. Total Brazilian production numbers had dropped. There was a race to see who could bring out the lowest number. I think the market is pretty well satisfied with the idea that, if it continues to stay dry, that we're going to end up somewhere in the low to mid 90s for overall Brazilian corn production. And we've dealt with that. We priced that in. That was really the main narrative that was going on when we made the contract highs. So I think right now we're in the process of doing the exact opposite. We're going to take it too low in the near term, and we're going to price in some of these bigger acreage numbers. There's one number that stands out above the rest. One outfit said, hey, we think acres for corn are 5.7 million more than the USDA's number. Well, unfortunately, the market may want to price that number in, and it may want to price that number in assuming a trend line yield on that number. And that's going to take this market lower than where it is now. Should it do that? We seem to do that, a lot of springs where you'll have this market price in big acres and a big yield before the crop is even pollinated. And those typically make your late spring, early summer lows, and then you make that low, and then you get your summer weather market. So I do still think we're going to have that, but without a legitimate weather problem, I think our summer weather market is going to be an exercise of retracing part of this drop that we just had. So if you ask me, I think the highs are in for the year for corn, unless we end up having a real drought. And so what we need to be focused on is, where does this market forge its lows? Once we are confident that we've made that late spring, early summer low, then every technical analyst out there is going to be retracing whatever the move is from 638, the contract high that was made earlier this month, down to whatever that low is. And then they're going to say, hey, 38% retracement is this price, 50% retracement is this price, 62% retracement is at this price. And if I'm a producer, I probably want to be very mindful of those price points that technical analysts are talking about. And I'm going to front run those prices a little bit to get some orders to do some catch-up sales. Because let's face it, without a legitimate weather problem this year, we have a pretty good crop. We don't need to go and take those highs out that we already made earlier this month.
Brian, on the soybean side, soybeans didn't have as bad of a day today as corn, ended up finishing just moderately lower. We're holding some decent price levels in beans. We know the carryout's tight. We're going to need to produce a pretty good soybean crop here in the U.S. to help build up those world supplies. What are your thoughts on the soybean market after today? Is it some of the same dynamics as corn, or are we talking some different things here?
Similar, Jesse, but different timing, I think. If corn wants to price in the idea that acres are going to be substantially bigger than the USDA's number, I don't think you could do that with soybeans simultaneously. We only have so many acres to go around. So if the market's set on pricing in the corn acres, those acres have to come at the expense of something. I think that's what's helping keep the soybean market supported. I do think there's going to be a point down the road, and maybe it's 2 to 3 weeks out, where we say, you know what, we're not going to get all those corn acres in. I've talked to a lot of producers that said because of the inputs, especially fertilizer, when you just look at the sheer revenue per acre for soybeans versus corn, they went soybeans. And so I do think there will be a period where we say, well, wait a minute, we're not going to have that acreage for corn. And by the way, we're probably not going to grow a trend line yield, because that trend line yield is 3 bushels per acre above our current record in actual real world conditions, not a USDA balance sheet. And so I think there will be that point where corn tries to bottom. Then we're going to say, well, what if the bean acres are bigger, and the bean market may play a little catch-up work? But let's think of this in perspective. So the lows that we had in late April for November soybeans were around 13.12, and we're 35 cents above that right now. The lows that we had in December corn in late April were at 5.37 and a quarter. We're about 20 cents below that right now. So corn is way ahead of soybeans as far as this sell-off program that we're seeing right now. And it's trading the news sooner. The reproductive cycle for corn is sooner. The crop went in the ground quicker. That's why beans were apparently up overnight, as people were concerned that the bean crop, wasn't getting in as fast as what the expectations were. Stupid reason to rally it, when they're just off a few percentage points. It's going to go in. But I think that's why we're seeing the corn market a little ahead of soybeans. I do think soybeans will have their day, and they'll catch up to the downside. So if you feel like you're under hedged right now based on the move, I would go to the soybean market, look at some puts, at least a $13 put to put a good floor under it. I think you're at prices where you could just make some straight sales and replace with a call if you want to still have upside open during summer. But if I'm doing some catch-up work on some hedges, I'm doing it on soybeans right now.
I think one other thought in soybeans as well that maybe is helping support this market too for now is the soy oil market. We look at bean oil, palm oil, you name it. There's still a lot of strength in that side of the soy complex, Brian.
We had soy oil sharply higher. We had soybean meal lower today. So oil share is still strong. And yes, I do think the vegetable oil market is still something, maybe the last thing that is no one's quite sure where that market's going to reach its highs. We had a pretty good pullback off the highs. We were near limit up today and then ended up pulling off of that. To me, if the soybean oil market takes out last week's lows, then that'll reinforce that the soybean oil market probably has also topped. But that's one thing that we haven't done in oil that we've done in some of these other markets is take out support. So we built some support from that pullback off the highs. We've tried to rally off those lows. If we take those lows out, I think you're going to see a mass liquidation event in soy oil.
By all intents and purposes, wheat today was the winner of the grain complex. It didn't have as bad of a day as corn and soybeans. I know we got that huge acreage estimate from the wheat tour in Kansas last week. You look at this wheat market overall, whether we're talking, soft red, hard red, or spring wheat, anything you're seeing in the wheat market we need to pay attention to as we move forward from here.
Well, we compared corn and soybeans to each other. I think the wheat market is ahead of corn even, and reproductively it is. We're going to be approaching harvest here. So with the wheat market, we've seen the market price in a lot of the rain that's come through, and the wheat market right now has one of the three major wheats that we trade, the spring wheat. We're still seeing concerns about conditions there. I think there's some spreading in between wheat and corn. When you look at the value of hard red wheat versus the value of corn, corn's just too expensive or wheat's too cheap relative to each other. So I think you're going to start seeing a little bit more of selling corn and buying wheat as a spread. That may not mean that wheat needs to go up, but that might mean that it goes down much slower than corn on this continued slide. But I think we're going to get to a point where the wheat market has already taken a lot of the premium out of the market, a lot of the risk premium. We'll probably end up making some harvest lows for wheat about the same time that corn finds its late spring, early summer low. And then I think we'll see a concerted move to some higher values again in wheat. Probably look at wheat in the same fashion. You know, what was the contract high? Where do we end up making some strong lows once we can identify that those lows were made? And then look at some of these major retracement levels if you need to make some catch-up sales, especially if you don't store wheat and we get a little bit of a good rally in the short term. You want to use that rally to your advantage on some of that wheat that you just can't put in the bin.
Brian, let's talk livestock. Looking at cattle today, especially that feeder cattle market, really relished in the lower cord prices today. Live cattle, though, fat cattle, kind of getting caught behind the packer capacity limitations, that entire fight that we've been talking about and hearing about. But you look at this cattle market today, not a bad day overall, especially, again, feeder cattle, seeing some good numbers there. What are your thoughts on cattle after today?
Live cattle is stuck in a range. We've been in this range for a while, months. So sick of watching box beef go up and make these moves, and then you look at the live cattle futures and they're just stagnant. I'm trading the market from both sides. You've got a pretty well-defined downtrend off the contract highs. You've got a very well-defined uptrend from the lows that were made in fall, and the market will probably break out of that at some point. We just don't have the catalyst quite yet. But I'm looking at this August live cattle contract up around 122. You're going to see the downtrend. You get down around 118-ish, and you're going to see the uptrend coming in that vicinity over the next week or so. So I'll trade the market from both sides until there's another shoe that drops that says, hey, this is where we're going. But right now, we just don't have the cash supporting higher futures. Again, the box beef keeps moving, but we all know the story there. Higher box beef does not have to translate into higher futures. And we can be mad at that scenario all we want, but that's the scenario we're in right now.
Very good point there. On the hog side, we caught some momentum here today. We're starting to test some of those contract highs here, and hogs just keep following product values higher. Any thoughts on this hog market right now, Brian?
Hogs are very well entrenched in this uptrend. It seems like from the funds right now, if there's a market that they want to be long, they're choosing the hogs over the live cattle right now. Market made some new contract highs. July is really leading the run right now. I think there's a lot of participants that still believe that we could potentially retest the highs made in 2014. It still sounds like it's a ways away, 16, 17 cents a hundredweight, but that really, if the market's moving a couple bucks a day, that's not that far. But I tell you what, we're extremely overbought. When you look at that chart, it looks like a chart of corn or Bitcoin or whatever before they eventually rolled over. So could we continue to go higher? Yes, absolutely. But I think that's a market where I'm going to be very closely looking at some puts and what puts might look like a good value based on some of the major lows that we've made on the chart. Because just like corn has illustrated, you start taking out some important price points. It doesn't matter if you're still bullish. The market's doing what it's doing. So if there's some major lows that have been scored on some of these July and deferred lean hog contracts, I want to buy some puts at those major strike price levels, because I do think this market's going to roll over at some point.
Brian, any final thoughts you have for us here today? Anything you want to reiterate? Obviously, busy day, a lot of questions out there from farmers and producers. Anything you want to add here before we wrap it up?
Just remember how happy you were when corn hit $5 and beans hit $13 on the way up. And I know we're not at the highs anymore, but let's not be less happy about $5 corn on the way down than we were on the way up. It's still the same $5 corn. And I think if you take the time to look at what your production estimates are and your break-even levels, you'll realize that we're still in a very good position, for producers across the farm belt. So, let's have a positive attitude. If you need to have protection, find somebody to talk to, get some kind of coverage, and get yourself protected. And if you need any help from us, we're here for you.
You definitely are. I was going to mention that as well. Of course, agmarket.net. You guys have your app as well. It's available on the Apple App Store and the Android Google Play Store. And I know folks can find you guys on your website, reach out, give you a phone call, email, a lot of different ways to contact you guys, Brian.
That's right. You can talk to anybody at the agmarket.net team at 844-4AGMARKET. So 844-424-6758. You can reach me directly at 815-665-0463. My Twitter handle is @BJSplitt, and the website is www.agmarket.net.
Brian, appreciate the time and insight as always. Thanks so much, and we will wish you a great rest of your afternoon. We'll talk to you again soon.
Thank you, Jesse. Appreciate it.
Brian Splitt with agmarket.net, our guest today here on Market Talk, brought to you today by GrowMark FS. Find us online, markettalkag.com. This has been the Tuesday, May 25th edition of the show. I'm Jesse Allen. Have a great